Hello and welcome to Macro Mondays here on Landy's Crypto Corner. Today is February 3rd, 2025, and we're looking at Bitcoin here on the daily time frame. And we're going to talk about a few things that happened over the weekend since we last spoke on Friday. We actually got the move that I had spoken about to the bottom side of the range when I turn on the support and resistances and show you in the lower term time frames kind of how this move developed and how it played out very technically. I think it should be a little eye-opening. I had mentioned on Friday as well that we were moving from expansion into compression of volatility, and only if we saw closes below the lower second would I be looking for continuation, typically down to those lower levels. Bitcoin got it all done in one shot without even initiating an expansive phase to the downside here. So cool stuff. Quite honestly, this is not the first giant candle, just shy of $12,000 here, wick to wick, that we've seen in this range. We saw a big old Darth Maul dildo over here, as Eric Crown would say, in the on the 5th of December. And that was about a month out from the election after, the really big rally up here. And, this is not unexpected stuff. A lot of people saying, oh, well, it was because of the tariffs. Well, remember, we talked about there being a lower high, lower low structure here already in place on Friday, and that very likely we were going to see, the lows and lower get tested. We laid out the criteria for looking at each level to the downside, irrespective of time frame. But, if those downside areas weren't hit on the daily already, that we would be seeing them hit. We saw all of them taken in one shot in the Sunday into Monday candle Sunday, of course, dumping out to a new lower low on a swing, but hanging on by a thread to this swing low here of this lower low structure here. So lower low to a lower high, and now we have a lower low. So we do have a downtrend present here on the daily, but a massive, massive buyback off of our big demand zone to the downside. And let's go ahead and take a look at that. Now, of course, I'm going to tell you this move was not unexpected. It met all the criteria in the lower term timeframes that we talked about. We already had warnings, the bearish divergence, the lower high, the lower lows, all that good stuff. Now, for it to get done all in one shot, that's not always going to happen. But when we're in very large macro volatile ranges, like I showed on the monthly, this can happen. And of course, we did see it come to fruition on the daily time frame. So big moves. I personally love volatility. That's what I trade. And the lower term time frame volatility into the daily compression and through it to the bottom side, hitting those extremes, were telling me, at least at the lows relative to the daily, that this was going to get a nice buyback from that demand zone. And that's exactly what we did see. Now, where do things kind of go from here? We'll talk about that in just a moment. I want to show you how this move played out in lower term time frames to kind of walk you through all of the various warning signs that we were getting that things could potentially head down further. And they really got going once CME opened. So, when we have the Friday session close into the Saturday candle, well, Sunday we have CME open, and that's when things really started to get moving to the downside. Now, they were already kind of headed that way on spot anyway before the CME opened, but CME opened up and pushed everything down. So you can thank all of the broker dealers over there for this nice little washout. And as I have to point this out, there was some shade being thrown at Wintermute in particular, and because of the way that market makers make markets, people were saying that they manipulated the market. They didn't manipulate the price. They weren't the ones dumping price. That's not what market makers do. A very prominent personality kind of came at them, and they fully explained how market making works and how this is not them. They're providing liquidity. They're not moving the market. Any market maker who's providing liquidity is not actually a market maker. That is a market manipulator. We do see a lot of that in crypto. Wintermute and the other companies that operate and have licenses in the United States especially are not they're not market manipulators. They're market makers. They're liquidity providers, that kind of stuff. So that narrative is kind of silly, and it shows many that when prominent personalities that maybe understand a little bit but don't understand how things are actually, how the sausage is made, tend to make kind of wild accusations that aren't actually true. And if anybody's ever interested, you can come to a space and I'll be happy to explain what market makers actually do, and how they got confused with the market manipulators in crypto who sell themselves as market makers but are not actually market makers. They're moving the market and extracting value. That is not what Wintermute is doing. So, all right. Let's go ahead to those lower term timeframes. And in fact, we'll turn off the Bollinger Bands just so we have a clean chart to look at the support and resistance and trend stuff, just so that I can kind of show you how this move played out, right? So we saw Bitcoin, on the daily kind of put in that lower high relative to the higher highs that were over here, right? And that was, of course, the all-time high area here. We saw the lower highs on the daily kind of spike into that 106 area and then kind of reject, and then come back down to try to find support. We did get on the prior Sunday, we saw, the market, weakening in this support area after finding this 101, 174 as support and kind of playing around the high side structure here, going sideways, losing it. And even in the lower term timeframes, you can see right down to the candle closures, kind of how it began to lose this area. Tried to hold it here, fell apart, tried to rally above, and then fell below. If you're using lower term time frame support and resistance, you look left and you can see kind of the areas of interest to the left on the chart here, where price was trying to find some structure to hang on to in terms of historical orders that were filled. It did rally back above. It even deviated and then got back above that 104 and rallied back to 106, right? Sat on $104,000. Tried that 106 area again, got rejected, and started to fall back into support. And I had mentioned, on Friday that if 101 starts to get closed below, we have to look out for, the local low structure on the daily, and then down to $95,000 to $96,000. Anywhere below there, I had mentioned that the actual low side zone of interest is in play. So what we ended up seeing was after 101 did start to get lost, it got rejected, and then started to fall towards the 96 150 area. And it began to, you can call it 95 to 96. 95 didn't really hold that well. It was more like the 96 kind of being the inflection point. See how it gets tapped, rallies off, gets rejected, tries to stay above it, and then boom, down right to our $92,000 level. And then it throws one nice spike into our liquidity zone down here, just below $92,000, with that low wick coming in at 91,178. Did not get any closures below there. Began to rally up. Found our little midline there around that deep 95 area to 96,150 as a rejective area. Nice higher low structure, and then boom, right back to the upside to 101, and now sitting on that 101 on a close open and trading slightly above it in the current candle. So for any of those of you who have been, attempting this stuff, you can see if this is your first time kind of looking at this stuff and maybe following my technical analysis learning videos over there with Deorganized with Peace Love, or, been watching me for a while, kind of going from the macro timeframes to the dailies and kind of picking out zones of interest, you can see how relevant those higher term timeframe zones of interest are. And in this case, we're in the same spot, above 101, 175, 101, give it some room. It's fine. Then we start looking to 104 up here by the 1272. Anywhere above there, when we start seeing closes, we're looking back to that 106 to just over that $108,000. Anywhere above there, we're hitting blue skies. We're likely going to go test the all-time high and higher. And again, I said this last week. I've said it every video, taking it $2,000 at a time until we get to 112. Then we jump to 3 from 112 to 115, and these are zones of interest. So above 104, we're looking at 104 to 106, and then 106 to 108 as a zone of interest, 108 to 110, and then 110 to 112. Above there, we start getting more volatile to the upside. We're going to talk about this in the daily as well in just a moment, but we start going 115, and then I'm going in $5,000 chunks, 115 to 120, 120 to 125, 125 to 130, and so on and so forth, as areas of interest or zones of interest above in blue skies. And, you know, the downside has to be talked about here. We'll throw back on the Bollinger Bands here in a second, but, you know, if we do see Bitcoin start to trade back below the 101 area, can it hold on to some of the high side structure at, you know, $100,000 and just below, you know, kind of where we saw these lows coming in? Sure. Yeah. If it starts to lose even this close open right here, which is right where the wick low is coming in at 97,715, then we're looking back to that 96. You know, on some charts, it's going to be 95 to 96. Here on Coinbase, we'll just call it $96,000. There is a little bit of a zone between the upper 95 and lower $96,000 region, but anywhere below there on closes, I'm looking for it to then run back down. This was an incredibly powerful buyback above that that support resistance zone for the higher term time frame close here. So, you know, it looks good for right now, but again, it is a bearish structure. This is a downtrending structure, so don't be surprised if it loses this area and tries to head back down. And on the other side of that, we'll give some criteria for setting a daily low, which is where yesterday's high rejected. But anywhere below that wick low, obviously, anywhere below 96K, we're looking to somewhere around there. Could we get pit stops in between? Sure, but overall target would still be back to 92. And this whole zone is fair game. Doesn't mean it gets there, but it would be fair game between 92 and 88,700, where we got that $89,000, $300 front run of this higher low swing, where the 1.168 Fibonacci level is. Of course, these are the fib extensions from the $69,000 prior cycle high to the bear market low at $15,500. These are the extensions. They're 16.8% above $69,000, 27.2%. and so on and so forth. And again, I'll remind you that once we start seeing Bitcoin get some higher term time frame closes, especially if the daily hasn't already begun to run the highs above that 1272, I would look for it to do so. And then in the more macro structure, I would be looking as the next big area around 128 to 130, right? So, you know, we have some pretty clear stuff going on. This is not very complicated when looking at price. Many people, when things are falling or rising, get very depressed when they're falling and very excited when they're rising. Understand what trend we're in, understand where the support and resistance zones and areas of interest are, and understand that right now we are in a volatility compression on the daily for closes. So what would get expansion? Let's go ahead and turn back on the Bollinger Band set here. Of course, this is a triple Bollinger Band set. You can see that we are getting a nice compression here. We're getting ever so slight expansion of volatility as it relates to the bands. And remember, this is on a closing basis. Back below the lower second at 98,700 here. On any closes, we're running this low 97.6 to that $96,000. Anywhere below there, we're in full-on expansion back down to the support at 92 to 88,700. as a zone. To the upside, we need to see Bitcoin recover and close above yesterday's high, essentially at 102,600. That would set a daily low. I would, of course, look for it to get above the basis band, which is right around there, to that 1272 and the topside daily resistance here at $104,000. If it did swing above and fail at the upper first, I'd be looking for this area to try and hold up. Where the lower first is coming in, kind of trapping between there. But if we do see any even lower term time frame closes above the daily upper first, we could probably pretty safely start to look for that 106. Anywhere above there, we're looking at that upper second being confluent with that area. Any closes above there on the daily, if we hadn't already seen 108 by the upper third hit, I would look for it to get hit, and then I'd look for expansion to really get rolling above the upper second and this 108, 388. We would see price above the current upper second and upper third, kicking off daily expansion to the upside from a nice compression here. So be aware that while Bitcoin is in an expansive phase, if we're not seeing closes above the upper second or below the lower second, that's not going to kick off expansion, right? We can get wicks straight through the downside, straight through the upside to new highs, and it doesn't do anything for volatility expansion on the daily. We need to see closes. So in this case, closes above 106 would kick off volatility expansion into that final area of overhead resistance at 108 or just above 108. Any closes below the lower second on the daily would kick off volatility expansion to the downside. If we hadn't already seen price move down to 96 and below, we would be expecting price to at least try down there in an expansive posture. So we are in a good position if we're bullish. And if you're bearish and you took this move, you're very, very happy because you got some nice reversal trades right back to the upside here to be bullish. So we did see a little bit of a V recovery in those lower term time frames. Like a 4 hour, so on and so forth. Let's go ahead and take a look at a few things like RSI. So I would say that that bearish divergence has well played out. And at this point, if we were going to look at the edge of the bearish control zone, should Bitcoin start to head back down, that is at $93,000. So again, about $1,000 above our primary support at the bottom side of this range. To the top side here, we have the edge of the bullish control zone. That would actually put Bitcoin at the all-time high, slightly higher there, 108,500. So pretty interesting confluences here. Let's go ahead and take a look at where the SMA is. Where would Bitcoin cross over the SMA? Above 103. We cross above the SMA here. And, you know, we want to see higher highs than this last lower high on divergence. There's still going to be some divergences playing out throughout this entire zone. We need to see a trend break now. The trend breaking, to break the trend, we have a lower high to break, and that lower high is going to be the 106,500 essentially up here. That would be a trend break. From there, no matter how high price goes, we would be looking for higher low, equal low structure to start developing from there for a trend reversal on the daily, and then try to hit full trend from there with another higher low and higher high. Sorry. All right, let's let's take a look at the monthly and the weekly real quick here. I had mentioned, on Friday, the monthly, I did not see the criteria that I wanted to see for the bulls, but that doesn't mean that they can't fulfill that criteria, February into March. So let's go ahead and take a look at the monthly real quick just to revisit it and where the upper second is. And it's important because it's right there at the all-time high area. My apologies. Give me just a second here. I hope my son isn't getting me sick again. So kids, they're always getting sick, always bringing something home from school, but we'll find out throughout the rest of this week, right? All right, so upper second is right there at 108,100. As Bitcoin rises to it, you're likely going to see this adjust a little bit up towards the highs here, above this high where it currently is, maybe even to the all-time high. I would say, in order for Bitcoin to meet some criteria for volatility expansion to the upside, I'd need to see February closing above probably 110 and starting to actually run towards that upper third, which is just above $130,000 up there. Again, as long as Bitcoin is trapped in between the upper second and upper first, the upper first is still fair game on the monthly in terms of levels of interest for volatility. This just so happens to be the red line on our daily. It's right around $85,000. If Bitcoin starts trading towards that upper second, you're likely going to see this number update ever so slightly intra-month, meaning in between the closes here, that we'd likely see this around 85. Right now, it's currently just under there at 84,400. So Let's go ahead and take a look at the weekly. See how the weekly closed. Weekly closed pretty ugly. This is a lower high on the weekly. Does not mean much. We got a higher low down here at $89,000 on a swing and 93,500 on a close, which was just ran. This is painting like it wants to become a consolidation. I mentioned this on the weekly that we are moving from this big expansion, which still offers up some really juicy upside, to a compression phase. The upper second is currently at 117. If Bitcoin breaks back above the upper first, which it's rejected today, and that's at 102,600, I would be looking for, this to be fair game up here and likely update to around 120. Above there, of course, we have the upper third on the weekly at that 132,500. You can see that we've moved from a big expansion. While we still have the bands expanded, the BBWP is in a cool down phase because price has gone sideways relative to the bands, and we have the basis band catching up on the weekly here, which is now at the bottom side there at just below our zone of interest for our local range there, at coming in at 87,637. Of course, this is a 20 simple moving average. If Bitcoin does leg back up, does this lower high and a close mean anything? Well, it was a higher high and a wick, lower high and a close. This usually spells consolidation until we see resolution below on closes like an $89,000. That's where we would see resolution. Otherwise, it's just saying sideways. Does not mean a whole lot right now. And the strong buyback off of that bottom side area is going to be something that we now have to watch, right? So if we start to see it faltering below here intra-week, eyes on $87,000, because that would be a lower high with a higher high swing and then breaking to a lower low. Still could turn out to be a deviation because in terms of swing trend, we still have a higher high, but the closes do matter. So, but it would still look like consolidation until we saw at least one more lower high and then lower low, and then it's pretty much downtrending time. And full downtrend, we start looking for lower prices. But until then, I'm looking at a range. That's exactly what it is. Now, weekly did get a cross back to the upside here. 101,700 by the end of the week would get a full cross back to the upside for Bitcoin's stochastic momentum indicator here. And, we don't really need the trend line regression unless we're looking for a potential rejection of this trend line, because we did break down. I noted that on Friday. And in order for it to have turned into a deviation, it was pretty far away from the price action it needed to. So it was continuing down, indicating that we had pressure down. We saw that pressure down play out throughout the weekend and into the Monday candle. Yes. Participants in the market were taking advantage of the lower liquidity environment to move price to areas of interest to the downside. Was that market makers? Not legit market makers. Maybe some market makers that pitch themselves as legit, but actually move the markets. But when we're talking about real, actual, legit market making companies, this was not them. But yeah. That's pretty much all I got for you today. We'll follow up with, with price on Wednesday for the Wednesday check-in and see how this develops. This is one of my favorite periods of time in price action, is moving from expansion back to compression, because I love to play the expansive move. So I'll be positioning on lower term timeframes, and hopefully on Tuesday's video with Peace Love tomorrow morning, I will maybe describe a little bit more about what it is I'm going to look for in lower term time frames, and possibly talk about that on Wednesday or Friday, depending on where price is. But I'll leave you with all of that. I hope that you didn't get shaken out of these markets. This goes to show you that a lot of people are pretty illiquid and over leveraged, quite frankly, on about almost just shy of $3 billion in open interest was wiped out. And that's open interest is futures contracts. So it's people taking leveraged positions. and they were taking it at the support as the support failed, and it fueled a big old move down. So this wasn't the only move down. These were not the only players that were not only in crypto taking advantage. When CME opened, they were absolutely dumping price out on the futures markets through pre-market today. So yeah, opportunistic news presented itself in order to do so, and then good news came out right after they got all their buys in. So yeah, that's kind of how things work. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. With all of that being said, Landy out. Take care.